Marc Chaikin Analytics, joining us here
Yeah.
Tuesday to give his technical and fundamental outlook on the markets. And Marc, I have a feeling you're still bullish. What's your reaction to the big sell-off over what we don't think is really surprising news about March not getting a rate cut?
Well, you're spot on. And the talking heads in the week prior to the meeting basically told you they weren't going to cut rates in March. And 5 rate cuts is probably ridiculous. And I've been looking for 3. But I think the bigger news is all we had was a 2% sell-off in the S&P. Come on, guys, from the peak the other day. I mean, and a lot of that's profit taking in the big cap tech names, as you mentioned. Um, I think this is a great earnings quarter for the market. I think I agree with you on Qualcomm. That's one of our favorite positions. We have a long-term options position in our options portfolio in that. And I think the story with Qualcomm, just to put a little color in there,
Sure.
in 2021, they bought a company called Nuvia. They paid $1.4 billion. Now, most of Qualcomm's business is in mobile chips. Nuvia is the basis of an Apple killer chip. We know that Apple has the best chip on the market right now for laptops, for serious computing off the phone. Qualcomm's in a position to take a lot of Intel's market share over time. Not going to happen quickly. So that's the growth story. Forget the mobile, forget the AI. It's the ability to put a bigger chip, a better chip into laptops that I think is the big growth story in Qualcomm, and I'd definitely be a buyer down here.
I mean, the Qualcomm PE has always been reasonable here. I'm a value guy at heart, and I've had this one for a long time, my long-term portfolio, and I plan on sticking with it. Current PE is 22. Forward PE is projected out at 16. I mean, there's not a lot of chip makers here that are trading for PEs of 16 right now. Again, these businesses are cyclical, so sometimes, if the economy goes for a downturn, that could change. But you're getting still a growth story here, and it's got a low PE.
It's a good one. Yeah, and I think the low PE is because it's viewed as a supplier to the smartphone market, and that is slow growth compared to what it used to be. But I think this Nuvia chip and the chip they built around the Nuvia technology is the long-term growth story there. In terms of the market, still very positive. Again, we know that the first 5 months in an election year are choppy. So don't expect the world, but do not give up on stocks. You got to be buying the dips. You got to stay with your long-term positions like you were talking about, Dennis. And then, starting in right before the conventions, typically the market has a big, strong 7-month finish in an election year. So you have to position yourself in one area that doesn't get talked about a lot because it's not a sector, it's not an industry group. There's no ETF around it, is IT services, which is a big bucket. But I think the play in AI, in addition to chips and the productivity enhancements to companies like ServiceNow and their core business, are IT service companies. So I picked out 2 of them. They're just indicative of who's going to benefit here. One of them is Accenture, ACN, and the other is IBM. And they both had really good earnings reports. And these are 2 stocks that I really like on weakness. And the reason is that consulting companies are going to get a big chunk of business because of AI. And that's probably why Gartner, which is priced, it's nosebleed prices
IT.
from my point of view, IT has been so high for a year now, because companies need help in figuring out how to use AI and what AI tools to use. And that's, I think, an untold story in this AI revolution. And by the way, AI is a game changer in so many industries, as we've said many times, in medical, in terms of enhancing productivity. But I think you've got to look deeper. So I've given you 2 of the big names in IT services, but there's 40 or 50 smaller names, and there may be a nugget or two in there, and we're going to be looking at them over the
What's
next
that third
month
stock
or
you
two.
gave there? I heard the ACN and the
Gartner
I.
Gartner Group IT, which is,
IT.
Oh, that's
they're
just the symbol IT. Okay,
Yeah, yeah.
wow.
they're the
Oh,
prototypical, how do I use technology on the corporate level? They rate technology. They have the Gartner Magic Quadrant, where they sort of break down the tools that work and the tools that don't really add value in a very visual way. But it's a consulting company. I think it's priced to the moon. So it's although I respect the momentum and it has a bullish power gauge rating, I never quite find a spot to buy it. But that's typical of an unsung portion of the market where I think you're going to get a lot of juice in
how
2024.
about the financials, Mark? We get the news yesterday out of
Mm.
NYCB. Now, I know they're not a huge part of the market, but I think it's more of a psychological, when you start talking at banks. I was looking at NYCB. I took its medicine yesterday. You look at this as just a one-off, or do you expect some more regional banking problems here in the foreseen months?
That's above my pay grade. Everybody's saying that the office market is going to cause pain, and this could have been one sort of harbinger of that. I like the financials, but not the banks. So looking at insurance companies, reinsurance, also some of the private equity capital markets companies like Apollo, KKR, with bullish power gauge ratings, because with interest rates coming down, any private equity company is going to have more flexibility to do deals, to acquire companies and workouts if they get in trouble in terms of their debt. So I think financials is such a big bucket, you got to break it down. And regional banks, unfortunately, are where you might have the problems in the office market. Banks like Bank of New York Mellon, State Street, PNC, I think are solid as a rock. And if you can buy them on dips, that's fine. But I think the bigger moves in that sector are going to come from some well-managed insurance companies. We had talked about WR Berkeley going back a few months. It's been on one of our portfolios, and they reported a blowout quarter and spiked up. On the other hand, MetLife, which is also in one of our portfolios, got a very poor reaction to their earnings yesterday. So highly selective, and that I think is my watchword for 2024. It's a stock picker's market.